And you do not need to have a sustainability wording in your title. And you don't need to work within sustainability or within finance. But I think that what you do in your everyday job and how it can impact where you work has probably a much larger impact.
Welcome to The Sustainable Edge, your podcast that moves sustainability beyond talk. You get to hear sharp perspectives and leave with insights you can put into action. I'm your host, Joachim Nahem, and this podcast is produced by Position Green. Welcome back to Sustainable Edge. Today I'm joined by Hilde Nordbø, who is EVP Sustainability at DNB Group. DNB is Norway's largest financial services company and also the second largest bank in the Nordics. Today we're going to talk about how to stay true to your sustainability transition in a volatile world. We're going to talk about lessons learned for DNB in their first CSRD and ESRS aligned report. We're going to talk about client engagement and science-based targets and no regret moves on sustainability. We're also going to talk about how to allocate 140 billion euro for sustainable capital allocation. What are the opportunities in the market? Hilde, welcome to Sustainable Edge.
Thank you very much, Joachim.
So, as I mentioned, we live in a volatile world. Geopolitics, markets, we all seem to be caught up in this sort of volatility. And one of the questions we get from listeners is, how do you stay true to your sustainability strategy in these sort of volatile times? You know, with everything that's happening, how does DNB still stay focused on sustainability?
That's a very good question. And I think that one of the kind of overarching headlines that we kind of work around is that how do we separate noise from signals? Because there is definitely a lot of noise when it comes to the geopolitical pictures and also what we've seen with banks leaving different initiatives. So there's a lot of things to kind of analyze. So one of the things that we actually do that's maybe a little bit new is that we have to make sure that we are very well aligned internally and that we are able to share the different signals and information that we have, and also make sure that we do not act on what is considered noise. So from the kind of group sustainability perspective, we have to work closely with the risk management internally and the client-facing environments, but also, of course, public affairs. So that is kind of one of the information, let's say, aspect that we have to work with in order to separate what are still important signals that we need to work around. Because what we also see in this very volatile world, where there's so many things changing, is that the strategy and the approach that we have to sustainability and that we set out many years ago actually stands the test of these times. And I think that is rooted in the fact that we have kind of started working on sustainability from the very core business perspective. So what are the material topics that we have to address as a bank? I mean, climate issues is still very much relevant, workers' conditions, climate transition, and physical risk as well in relation to climate. So I think that yes, there's a lot of volatility, but there is still so many important topics that we need to work on. So it's being able to kind of separate the noise from signals.
And can you just give our listeners some concrete examples of the risks you mentioned now for a bank? You said, you know, there is physical climate risk, there is transition risk.
Yes.
Can you give like 2 examples of risks you've more recently identified as DNB?
Yes, I think that, and maybe they're not that recent, of course, but I mean, when it comes to
or still material.
Yeah, still material risk. Physical risk, for instance, would be within real estate. There could be that the clients that we are lending to have their properties close to, let's say, rivers where there's going to be more flooding, or there could be incidents like fires that we've seen in California. Or there could be more rain also when it comes to
and we've seen this in Norway, obviously.
Definitely.
Recent floods that have had impact on real estate, commercial and residential, where you most likely are a lender in any given area where
it's a very large
that's hit
part.
by a flood.
Yeah, exactly. And it's a very large part of our portfolio. So that is the kind of physical risk that we need to have insight into. And the more kind of maybe a little bit more difficult but also interesting part is probably the transition risk, which has to do with our clients' business models. So how is the fact that we have to transition towards a net zero society in 2050, because that is still where we're going to go. how does that impact our clients' capex, opex, turnover, etc. So a very kind of, it's not a new example, but within the car industry, for instance, if you didn't transition your business model towards the electrical cars many years ago, you are now out of business because we are transitioning towards to the electrical car fleet.
And let me ask you on those two concrete examples of cars, either retailers selling cars or individuals purchasing cars with perhaps a bank loan from DNB. And also when it comes to homes or businesses impacted by floods. You mentioned these as potential material risks, and thereby they are risks to your consumers or your clients. Do you get better terms if you somehow identify these risks? So as a business, if you've done, let's say you are a real estate business, you own multiple properties, and you have done a TCFD or a climate risk aligned analysis, and you go to DNB and say, look, here are the risks in more granular detail, here are the mitigations we're taking, here's sort of the risk. Will they be rewarded for doing that?
That is a really big question here, and I think that it has a lot of answers depending on what kind of angle you take. But of course, what we have seen in the recent years, probably 10 years, is the growth of the sustainable or green labeled products, where there is a slightly margin given to the clients exactly for that reason, because they are doing different aspects. For instance, within commercial real estate, they have better energy efficiency within their portfolio. For instance, they are giving a slightly better margin. So, but I think that has also been done for a very small part of the actual real economy. Because the big change and what we have to see is transition for all kinds of companies, also for the ones that hasn't done that kind of small step yet in order to become more green, so to say. So I think that, so the other part of this is that as we integrate this as a part of our regular credit process and the ESG considerations are integrated as a part of kind of regular credit evaluation of the client, this becomes part of the holistic evaluation that we do of the client, rather than saying that this is green or brown, or we can kind of categorize clients according to only ESG. The E and S and G potential risks are integrated into the total evaluation of the clients.
But beyond risk, you have an incentive to nudge your customers to something that can be labeled green, meaning you have, we'll come back to it, allocated or have a target of allocating 1,500, let's get this right, actually, it's 1,500 billion NOK, which roughly translate to about 140 billion euro that you want to use for sustainable investment.
Yes.
We'll get back to that, but to reach that target, you obviously have an incentive to get your customers onto these greener products.
Yes.
And if we focus quickly on the consumer side, how would you sort of nudge consumers through real estate, or that is when they're buying an apartment or a house or a some kind of form of real estate? Are there rewards for going green, as in incentives on the loan if they can prove energy consumption or green energy consumption? There must be some incentives in the playbook, I would think, for your advisors here.
Yes, and that is also a very good question, because I think that from the bank's perspective, the area where we could have the potentially greatest impact is rather on the corporate side, rather on the personal customer, actually. But what we do have are loans to private customers that live in very energy efficient homes, and they could get a green mortgage. But again, that is to the very high energy labels for that type of clients, which is not the large amount of housing.
Right. So it's not basically where the real impact will be.
No, it isn't.
In terms of where your capital is allocated or potentially
where it could have the impact. No, yeah. But still, it's a really important aspect to make sure that we actually also contribute to the transition within the real estate portfolio as well. But that is more a societal maybe challenge, rather than us as a bank being the ones pushing for that transition, because it also has to make sure that the clients can actually take on that extra investment on their house if they were to improve the energy efficiency from a low label to up to the better ones.
And now we've spoken about real estate. We've spoken about that you want to allocate 140 million euro in sustainable investment. 150, depending on the Norwegian kroner euro, part of the volatility. It goes up and it goes down.
That's very true.
And let's talk a little about your transition plan, because I believe you weren't the first bank, but you are one of multiple Nordic banks that has a transition plan in place showing how you get to net zero.
Yeah.
So beyond just saying we're going to be magically net zero by 2050, you've worked your way backwards, and especially to 2030, where you have some pretty concrete targets overall, but also sector by sector.
Yeah.
I believe real estate being one of them. And for our viewers, we're going to get up on the screen the transition plan that shows how you're looking to reduce emissions based on sectors and where you have the most impact as a business. Take us through a little bit that thinking on transition and sectors and your approach.
Yeah, so that was a very difficult exercise, so to say, because as you said, there is so much uncertainty on how we're actually going to come to 2050 in order to be a net zero society. So what we did was, of course, then to make sure that we did the different scenarios for our different industries, because making one for the bank as a total doesn't really make sense, because there's different scenarios and, of course, different measurements that we need to take within the different industries. But that was a really interesting project, of course, and it had to involve the entire bank, the different both industries and experts internally. And what we also saw was that a lot of our peers and also within different industries, they have their targets verified by the Science-Based Target Initiatives. And what we tried to do, or what we saw, was that being the bank that we are, our ambition is to be a transition bank. We have exposure within all industries that the Norwegian economy is exposed to. So we have oil and gas and shipping, among others. So we saw that the Science-Based Target Initiatives weren't necessarily fitted for us in order to validate our science-based targets, so to say. So we did this with our own resources, but we actually also got the targets verified by DNB after we had done the exercise.
So there's sort of independent assurance of it, but it's not SBTi aligned, which is the acronym for Science-Based Target Initiative. Although we should also, and we've discussed this on the podcast before, that there are changes also happening to SBTi in terms of sectors and how they go about it, and that it may be down the road possible to align some of these industries. You mentioned shipping and oil and gas with SBTi.
Yes, definitely. So, and this is definitely also work in progress, because we have been also very clear that how we're going to get both to the interim targets towards 2030 and also towards 2050, there's so many uncertainties that we do not control, and that also needs to be in place in order for all these things to happen on these trajectories that we have illustrated for the industries.
Take me through some of those dynamics. This transition plan was published in 2023. We're in 2025. As we started our conversation, it's volatile times. You spoke about distinguishing between noise and signals. So if we take out some of the noise, what are some of the signals that may impact or make you recalibrate your transition plan? Well,
what we at least have seen as we have started tracking the trajectories is that we're actually quite good on track, and I think you will see that on the screen as well. So it's only 2 years, and of course that's small compared to or thinking alongside 2050.
But only 5 years out from 2030, which is your sort of most important midway target.
Yes. So far it actually looks like we are on track when it comes to our client base. But at the same time, we all know that the world is not on that same trajectory towards the 1.5 degree scenario. And the way that we work with our clients is, I also mentioned that we consider ourselves a transition bank. So we want to work together with our clients on their transition, giving them a green loan or a transition loan that we also have that supports them in the transition. And that is also, for instance, very important for the hard-to-abate sector, like shipping, for instance. And when it comes to that industry, then we also work, of course, closely with the industry organization. IMO still has very ambitious goals for the industry, and there's a lot of new technology coming out there. So how we actually make sure, or let's say can work on being on that trajectory, there's a lot of different aspects depending on what kind of industry. But industry collaboration is, of course, one key.
And we heard about this in one of our previous episodes where we had the CEO of Wallenius Wilhelmsen, who had the slogan of, when I exactly labeled shipping as hard to abate, he said it's not hard to abate, it's hard to orchestrate. And in this orchestration, obviously banks or finance and the access to capital is key. We're using the term transition, we're using the term green, and as we know, these can often be defined in the eye of the beholder, and that's been part of the criticism of the finance sector and of industry is that everybody can run around and say something is green. And then obviously we've seen quite a shift from the regulatory perspective, that they want to regulate both on the finance and on the corporate side what we call green or you mentioned brown or somewhere in between. Now the EU has been the juggernaut in this regulatory change we've seen the past 10, 20 years. One of the key pieces of legislation that they put forward and that was adopted in 2024 is the CSRD and what's called ESRS, which is essentially Sustainability Disclosure Standards for corporates. Now there's been what we may call the infamous omnibus, which is a change to this law or a proposed change, but it looks like it will go through. And it fundamentally changes the number of companies that are in scope, but also what companies need to disclose on, whether you are in scope or not. Take us quickly through sort of how this regulatory change impacts you as a bank, because it also comes to the finance sector, where there are stricter rules of how you can label funds or financial products.
I think first of all, and now I probably have already started talking about green, brown myself, but I think that coming away from that green, brown and the kind of binary aspects of sustainability, I think it's a very good thing, because things are not either or in this field at all. But that being said, we still need definitions of what can be considered to be at least green. So I think that the definitions and the taxonomy in that sense has been very useful. And we've seen it especially within the asset management sector, where there's been a lot of funds that has been labeled green or sustainable or impact, etc., with not actually having any real impact at all. So I think that kind of cleaning up that has been very useful.
So it's good for you as a bank, and it's good for your industry,
yes,
that we get
definitely.
clearer definitions and more accountability, essentially.
Definitely. It has to do with trust, of course, and accountability, as you said. So I think that is a very good distinction that has been developed. And when it comes to reporting requirements as well, I'm not sure how many listeners have read different annual reports lately, but I mean, looking into the annual reports coming out of the CSRD reporting cycle are massive. So it's hard to kind of find maybe the right information there unless you're using an AI, which you of course can do as well. But what has come out of that is also that it has been very, very, very detailed requirements on how you can talk about, especially how you have impact. So if you have plans or ambitions of something you're going to do in 2 or 3 or 5 years, that has been scrapped out, because you have to be very, very concrete on how you actually talk about the work you're doing on the material ESG topics. So there's a lot less fuzz and blah in the annual reports.
But still very long. If I remember, almost 200 pages.
Definitely. It's more than half of the annual report of DNB, actually. So there's still too much information. And I think that is where the omnibus comes in, because that will be the next step of kind of clearing things up and making sure that we can be even more precise and focus on the real financial material issues for the different companies, both for us, which is useful for us, because then we can find information from our clients as well, for the ones who are affected by the requirements, but also for our investors, that they can more easily find what are the actual financial material aspects related to ESG.
Yep. So if I were going to summarize, you welcome the intention of CSRD and ESRS in terms of standardizing, but also forcing companies to be concrete on the impact of their business.
Yep.
Obviously, it's this double materiality concept, so it's the impact on society and people, but also financial impact, as you said, on their business. But that there would be less, and this is part of Omnibus, there will be less disclosures also for those, or obviously for those who are still in scope in ESRS, which you are, because on the way in you told me you have more than 10,000 employees, so you're well above the threshold of 1,000 employees. Yeah. And obviously your revenue is also way above the threshold. Yeah.
So let's say the challenge for us is that there are 80% less companies that will be or at least look like that has to report under the CSRD. And the way that we had kind of planned for this was that we would get access to data that we need for our own reporting, not only in light of CSRD, but also in light of the financial authorities' requirements towards us. So the data issue there has not been solved. So there we have to find ways in order to get hold of that data. But I think, again, the omnibus at least makes it probably the amount of data that we need could at least be less, but there is still a data challenge and a gap on what we need and what the companies disclose.
So you're actually emphasizing a dilemma with Omnibus, is that you remain in scope. So you have to report on ESRS. You're also in scope for some of the other EU regulations pertaining to the financial sector, both on the asset management side, but also as a financial institution and a market player, as it's defined, or market actor. But you're dependent on your customers and all the companies that you lend money to or manage their money or assets, investments, to have their data. But they're no longer, or most of them are no longer in scope. So how do you encourage, or how do you sort of plan to work with your customers in getting this ESG data? It may be a data problem, but you still you're going to have to solve it. What are some ideas on doing that?
That is a very good question. And one easy answer to that is, of course, use proxies, so that we would use estimates rather than actual data from our clients. Another possible solution to the problem is what is called the VSME standard, which is a voluntary standard that has been developed for small and medium-sized companies. And if you look into that standard, it's actually also very concrete, and even though it's a little bit complicated if you're not familiar with, let's say, the ESG topics, but I think that most companies are right now, it's actually also a very good recipe for how to integrate material ESG topics for any kind of company, actually, or industry, actually. So if we
this again is the EU proposed VSME standard, where they're saying it's voluntary, but hint, hint, we would sort of like businesses to disclose using this framework, and that would kind of solve part of at least the data problem you're describing.
Yeah. And the other solution, or another solution, would of course be to ask our clients for the data and make them disclose that. So, and we have already, let's say, processes for gathering ESG information from our clients through our credit process, where we have a ESG credit risk assessment tool. So we already have these processes in place.
And here it's an industry challenge, right? I mean, and here other Nordic banks, they may be your competitors on all other matters, but here you have a common interest in terms of getting this data or finding a way to centralize it, at the same time not burdening your customers with additional surveys or data requests. And that is what's been driving a lot of Omnibus. And the so-called Draghi report that the EU published on how to make European businesses more competitive was about lessening the administrative burden, including on sustainability, where there's this sense and experience for many that it becomes a big paper exercise. So the more you can do as an industry to streamline this and make it sort of one exercise for customers, rather than if you have 4 banks, somehow as a business and relationships, you'll need to do 4 different surveys. So it's more of an industry problem, isn't it?
Definitely.
It's not specifically to DNB.
No, not absolutely not. And I think that's also when you also mention the EU's plans and the Omnibus, I think also it's important to add that the EU has also set up very ambitious goals for, especially within climate environment. And I think that's important to notice that even though they have this simplification agenda moving forward, from our perspective, this does not mean at all that they have lesser ambitions when it comes to the climate issues and climate challenges and the environmental goal that they have set out. I think that rather it means that we can focus on actually working together with our clients to make sure that we can take the emissions down, rather than spending a lot of resources on the reporting. So I think that the combination of political measures that can come from the EU, being guarantees or different types of policy measures that they can come up with, in together with banks focusing on working with their clients, I think that combination is something that would also work in line with EU's ambition of becoming more competitive as well, because I think that the ESG issues will not go away. We still need to work on the climate challenges, but we need to do it more efficiently and in the real economy, rather than having all this reporting that has taken a lot of resources internally, at least up until now.
Let me ask you, Hilde, on more of a reflection from a professional who's worked on sustainability and in finance for many years. What would you want to share with our listeners as sort of one key insight you have on making sustainability real, whether it's in your personal or professional life?
Share with us some insight that you've garnered over the years as a sustainability professional and somebody who presumably in your private capacity also cares about these things.
That's a very good question. And I think that it has to do with, I think it's sometimes you kind of look for sustainability, where to start and where is it and what can I do? And then you tend to turn to your everyday life. But from my perspective, I think that it's important to remember that everybody can do something from where they sit. I think it was a Summa Equity pod that had a guest who talked about that. So what do you do with the seat that you've been given? And you do not need to have a sustainability wording in your title. And you don't need to work within sustainability or within finance for that matter. I mean, there are small steps that can be done within any type of job. And I think that is one important thing to tag along, because I mean, if I reduced how many air travels I have a year, maybe that could be important, but I think that what you do in your everyday job and how it can impact where you work has probably a much larger impact in the long run. And one word that has been, at least from my work so far career, is the materiality concept, which has now been talked about a lot, of course, but then also in connection with double materiality. But I think that remembering that what is closest to your business, what can I do that is material for you, and what kind of small changes can you actually make in order to either reduce emissions or be more energy efficient or other types of climate or ESG related topics.
And what are some of those examples, either that you do at work or on your way to work, distinguishing between?
Well, on my way to work, I actually take a bike. I have an electrical bike, but that is for efficiency actually, because it goes much faster for me.
Green and efficient.
Exactly, and those win-wins. That is exactly the point, because you have to find those win-wins. And I think so. That is one example. And then in my work, of course, working on sustainability, I work on these things every day. But I think
using your wallet, I believe you mentioned.
Yeah, that's
also.
true. Yes, of course. I mean, voting with your wallet is also a very important way to remember that everything you buy and purchase has an impact. And even though there are small amounts, I think that we have these campaigns where you can go and go to the beach and remove garbage. I think that's really important that we also do that. But if you make sure that what you purchase, you buy from companies that themselves have an environmental strategy and has a long-term plan when it comes to sustainability, that could maybe have a larger impact than going to the beach and removing garbage once a year, maybe. So voting with your wallet is one tip that I would say, and also remember kind of what you do in your everyday work life that actually also could have an impact.
And if we elevate this to DNB as a corporate, at least in Norway, a significant corporate, you're one of the largest listed, you're one of the largest in terms of being an employer, in terms of funds or capital that you manage or flow through your institution. Will there come a point where to be bankable at DNB, independent of if it's insurance or investment banking or retail banking, where there'll be some requirements for you as a business on ESG, meaning that you have to have disclosed something in terms of what is material and how you are transitioning or what you're doing to be bankable.
Yeah.
Almost like KYC.
Exactly.
You have to know your customer based on other political risks and all the forms we have to fill out if you're politically exposed or what type of citizenship you have and sanctions. Do you think we will end up with something similar when it comes to ESG?
Yes, definitely. And we have already seen that this is being more and more material and very concrete. So January this year, the EBA, the European Banking Authorities, came out with ESG guidelines for how the banks are to integrate ESG risk into our general overall risk management. And they mention a lot of processes within the bank that we have to integrate E and S and G issues into. And the starting point of that is what I talked about previously is the materiality analysis. So we have to do the materiality analysis and identify what are the most material issues for us. And there could be many, but at least climate change and adaptation to climate change is one that we will not come around, of course. And so what that means in practice, for one part is, and coming back to the transition plan actually, is that we need to, first of all, we need to have transition plans This is what the EBA guideline says. We need to have transition plans.
The EBA is the European
banking authorities. So we need to have transition plans in line with the 1.5 degree scenario. And then we need to have insight into how far away from that trajectory are we within different industries. And then what will be a small or kind of big, small gap from that trajectory? That is not necessarily defined, but we need to know. Because as we go closer to 2050 and there are less quotas, for instance, there will be sectors that...
You're talking about offsetting, carbon offsetting.
Will be more expensive. That will be a large cost for some of our clients. Climate issues will be more financial material as we move towards 2050. And that has to be integrated into the way we work as a bank. And it's not easy to kind of say this one thing will be that aspect that kind of, let's say, makes you bankable or not. Because again, this is a holistic evaluation. But the transition plan is one aspect of that.
Would it be possible to say that you can only do this with your customers? Meaning you're dependent on them also aligning with your transition plan or moving in the right direction on a 1.5 degree world or other specific sustainability targets, outcomes we want as a society. So it's kind of in your interest to have them do this, and whether that is by incentive or not banking them, there is an incentive to get this right, so to speak.
Exactly.
Whether it's a carrot or a stick.
Yeah, and you could also look at it the other way. You could also look at it in a way that we make sure that our processes that we have internally, calling them ESG or not, make sure that the ones we have in our portfolio are actually the companies that are on the right track when it comes to reaching net zero in 2050. And that would be, of course, related to that they have the cash flow they need to make the investments. They they are part of the transition. They still have a demand for their products. So there again, it's an evaluation of many different aspects that comes into this. And I think that it boils down to making sure that how we, let's say, choose our customers is a way of making sure that we are also on the same trajectory.
That makes a lot of sense. And let me ask you one more question, or a final question, sort of looking forward. And we started this conversation about how there's a lot of volatility in the markets, be they financial, geopolitical, and obviously sustainability, climate risk. Climate change has not exactly become less volatile. It manifests itself every day, every week, every part of the world, be it with fires, floods, other factors that impact businesses and finance. Looking forward, what are some of the other sort of sustainability topics that you see as if not as a risk, but as we speak a lot about climate change, but there are nature risks, there's biodiversity, there are circular economy models that are starting to take shape, especially in Europe. What are some of the other things you're looking at that you think will become topical, material for DNB going forward?
Yes, and I think that all of the topics that you mentioned are definitely will be very material also in the future. And I think that especially nature and biodiversity, we see that in relation to, for instance, ocean industries, fishing, renewable energy. It's an important topic. But another aspect as well is, of course, the cybersecurity. And I think that given the geopolitical picture, the energy security and also cybersecurity, there's, of course, a lot of discussions around defense going forward. And one we could also, let's say, have discussion, is that part of sustainability or not? And I think that is not that interesting to discuss, because it's more about how do we focus and use our resources smart. And the way also that we look at this is that even though it's really hard to know how this field develops, and there's a lot of still uncertainty when it comes to the regulatory aspects, we try to focus on what we call no regrets capabilities. I mean, what do we need to do even though we do not really know what's going to happen with the omnibus, for instance? What will be the concrete outcome of that? There are still topics that we really need to work on. And
what are some no regret moves for DNB?
For instance, the transition plan, working on integrating the most material E and G risks into how we work, into our core processes. And also, we haven't talked that much about opportunities, which is a shame actually, because there's a lot of business opportunities as well when it comes to financing and making sure that we actually manage.
And that's where you have the 140 billion
exactly,
euro.
Yeah.
If not in your pocket, you believe that's there in the market.
Yes.
So if you can find the projects either on the buy or sell side or on the financing side,
Definitely.
they're there to be had.
Yes.
And banks, a lot of financial institutions in Europe and globally are actually measured on the green ratio, lending ratio, in terms of how much of your lending portfolio is green or not.
Yeah.
And what it looks like in your transition plans, you want to increase that by quite a lot by 2030.
But not necessarily green.
I looked into it. It's the equivalent of the national budget in Norway.
Yes, but it's very important to remember.
1 year funding of an entire state budget for Norway.
Yes, but please note that it's not necessarily green, because that is a really important distinction.
Fine, it will include transition financing,
yes,
but it is, let's say it is directed towards what you are calling sustainable capital allocation. And whether it's green, transition, or something else, it is overall meant to have a positive sustainable impact, even if that's not a linear direction. Overall meant to be positive and impactful.
Yes, definitely.
Hilde, thank you so much for joining Sustainable Edge. It was a pleasure having you.
Thank you for inviting me.
That's it for this episode of Sustainable Edge. If you found today's conversation inspiring, make sure to subscribe and leave us a review. It helps more sustainability leaders find us.